Dr. Dan Seaver, professor of finance at San Diego State University and the publisher of the PadSystemReport.com website. After a huge bailout, the federal government has now temporarily taken over Fannie Mae and Freddie Mac. Give us your take on what this means to taxpayers, shareholders, and Fannie and Freddie employees.
Well, for Fannie and Freddie employees, I'm afraid some of them, may eventually get laid off because the long-run strategy, I think, is to shrink the size of Fannie and Freddie significantly. For taxpayers, the real problem is in the long run, the U.S. government is taking on a whole bunch of additional liabilities. They're getting a lot of additional assets, but we're not sure what condition those assets are actually in. And if the assets can't cover those liabilities, we'll be injecting new capital, and that will be taxpayer money. For the stockholders, I think that's the saddest story. The common stocks have dropped to about 1 because the federal government is going to call the shots and is going to muscle the common stockholders out of the way with their preferred stock and with their warrants. And I'm afraid the preferred stockholders are also going to take a huge hit because their dividends are going to be stopped, and the value of that kind of preferred, since it's going to come in behind the government's preferred, is probably much lower than it was even thought to be a week ago. So that's going to be a tough break. The main thing, I think, with dividend investing or anything else is you have to be broadly diversified. And so the idea is that if you are broadly diversified, the hits you take on your Fannie and Freddie should not wipe you out.
We also have Ann Lee on the phone with us, and she is the finance professor at Pace University's Lubin School of Business in New York. Can you tell us your take on the Freddie and Fannie takeover?
I think it's just a bandage move by the government. It has not corrected any of the serious problems that have caused this credit crisis in the first place. And I won't be surprised if there will be more government intervention in the future. This is definitely not the end of this.
So you see more problems down the road, more big institution problems or more mortgage industry related problems?
I think it's widespread. It's every type of credit is being affected by this. Clearly, it probably started at the subprime. It's spread into other forms of credit, in credit cards, etc. And we're seeing defaults everywhere in those areas as well as in commercial real estate. So I think that they've got a bigger problem on their hands, and this is just, like I said, a Band-Aid solution.
How far do you see this problem? 1 year, 2 years, or we still don't know?
We don't know. I wouldn't be surprised if it lasted decades.
What do you think would fix this problem?
Well, I've said many times before, the one most important thing is to bring transparency into this market, which still hasn't happened yet. And that's partially because of the Fed protecting the banks. That's the strongest lobby for the banks. I don't see how that's going to change as long as the American public lets this happen.